You're watching today's video technical update presented by FX Times. It is Monday, May 17th, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the forex markets. The market started the week with further consolidation in the currency markets. The euro dollar was supported as well as the pound yen after sliding during the Asian Open. Commodity currencies were pressured today. The Canadian dollar Japanese yen is testing an important support, and the New Zealand dollar greenback is heading toward a declining or heading lower in a declining channel. This video is being produced at about 2:30 p.m. Eastern Time, ahead of the close of the US session. Here's a weekly look at the euro dollar pair. Here, if the market breaks below the current support area, which the market is threatening to break, if this break continues, it could head down to the 115 level. Okay, so that's the weekly look with a swing projection. Now going all the way down to the 15-minute look, so we could examine what's going on as we test this support area. Looking at the 15-minute, we see that the market started with a decline this week to the 1.2230 area, then sort of remained in consolidation since, and now we close the gap here, and again testing this area that we started the week with. We could have a possible second swing here towards 1.2430 area. In any case, we are in consolidation and we should be looking at the support here. Since the market is in a declining mode, in a bearish mode, very strong bearish mode, we should anticipate the bearish action first. If the market continues here and breaks below our low here near the 1.2230 area, then we may continue, and we would, looking back at the weekly, we would likely see this to give us a signal, a bearish signal. Then we may want to wait for some kind of pullback to confirm before confirming the outlook to 1.15. So one more time, in the 15-minute time frame, we could be starting a decline now, but we should also anticipate the possibility of two swings towards this 1.2430 area, bringing us, let's see, if we look at, see this continuous side, let's looking at the last swing possible from the Friday high, this would be nearing the 61.8% area. Okay, so this is an important resistance zone if the market doesn't already start declining now. Oh, and the RSI, we see that it's reflecting consolidation as it bounced off 40 and then again could not go above 60. So once again, if it breaks above 60 or below 40, that could be further clue to the market's decision on its next move. Moving on to the pound yen pair now, we see here the market is testing this previous low, threatening to break it, and if it breaks, it could head down to near the 118, 119 area, which is the 2009 low. Here the RSI is testing its bullish range support. You see here the 40 already broke, but we also see that this area around 35 is also here, for example, supported, and then it broke for a bearish signal. So here, if the market breaks, if the RSI breaks below 35, that's going to be a major bearish signal for the pound yen, and it's going to very likely test the 119, 118 area. Now going down to the 1 hour time frame to examine the price action as the market tests this previous low here. Okay, so here we had the market consolidate last week and break down, testing this previous low as anticipated, and now we have a correction. Notice that so far your RSI is giving you a negative reversal, suggesting that in the short term we could have a swing projection as such. Okay, now currently we are in a near-term rally, So if this near-term rally does not break this previous high as it tests this 50 moving average, then the continuation is the scenario. However, it is still possible that the market will rally further to around the 50% retracement of this decline. Okay, you see this 50% at the 135.17 area. So this is similar to the euro dollar in that it is in a correction that could turn out to be a AB equals CD correction. But if it doesn't and the market starts to decline here, the target in the short term is the 129.50 area, while the target in the longer term, intermediate term, is the 119 area. Okay. Now turning our attention to the Canadian dollar, Japanese yen, as I've been always favoring the commodity currencies when it came to yen crosses. So here you see the Canadian dollar yen actually in the context of a rally, where the pound yen was in the context of a decline. So here, even though the recent move is pressuring the Canadian dollar, it looks like it's in the context of a bullish move, and it's actually testing the previous resistance area near the 89.90 area here. We saw a rejection last week of this tail, and the market looks like the 50 moving average is supporting Canadian dollar yen. So it's going to be interesting here as the market tests this support to see if we will have a return to commodity currency strength. Looking at the 1 hour time frame now. Okay. Here we have basically opened the week in the same manner as the euro dollar, pound yen. So we have this consolidation at the moment. Okay. And it'll be the important areas to look for is this 89.50, 89.60 area, which is the resistance, and also these two moving averages in the 1 hour time frame. So basically for the bullish scenario, you would see a break of the resistance level here and the moving averages, as well as the RSI breaking above 60. So those are some of your confirmations for the bullish outlook after this correction. For the bearish outlook, we need to test this low, of course, and break below that, and that's only in the short term. If we look at the weekly and the market breaks below moving average and tests it as resistance and continues to decline, then we are in a bearish mode, and we may have to start considering kind of a swing projection either from this high here, well, at the moment that would be a swing projection if the low here breaks. So if we have these lows break down, then that's the bearish scenario. But at the moment we're looking at the bullish scenario, and that requires a break of these moving averages 1 hour time frame, as well as the RSI moving above 60. Here's a look at the New Zealand dollar and greenback pair. Here we are seeing a break of this counter trend rally. Actually, you see here the trend has been bullish, but we are in consolidation mode with a slight declining tilt. So now we have this within this channel, we have a break with a very strong bearish candle in the weekly. So we are seeing bearish signal as this week starts. Here the RSI you see is still within 60 and 40, so it's not, it's in a reflecting a consolidation mode. Now looking at daily, we see this break, very strong break, but it's also testing low here, this previous low. Now I anticipate that there might be some pullback. If this price action were to continue this swing projection, a pullback and topping actions should confirm that. And you see the RSI is already breaking below the 40 in the daily time frame. Going into the 1 hour time frame now, we see that the reason for my anticipation of a pullback is the presence of a bullish divergence, although the scale of the pullback is questionable. We could have a very minor pullback. Looking back at the daily, we could just have a little bounce and then continue, or we could come back to test this previous low near the 0.71 area. In any case, a pullback to confirm the bearish outlook targets the 0.66 area, 0.6667 area, okay, which is around here. And that wraps it up for today. Visit fxtimes.com for more analysis updates and live events. Once again, I'm Fan Yang, your technical analyst here at FX Times, wishing you good trading.